Hey everybody, this is David Skarika, stock chart of the day for January 21st. Kind of waited till after the inauguration. Going to talk about a few things and maybe the effect some of those policies will have, in the coming week. But there's something I wanted to talk about that's quite interesting that came to my attention, and it's about China. So very quietly, China seems to be falling into a deflationary spiral, similar to what Japan did. So this is the China 10-year bond. And if we get the max chart here, what we will see is that, it was as high as 5% back in the 2000s, basically went through 3 and 5% when China was really going through those booms, et cetera. Now, one reason the yields weren't extremely high is because China always had pretty low inflation, even during their booms. So, and pretty low debt levels until after the financial crisis. The debt levels have taken off like everywhere else. But what we can see, despite debt levels increasing, just like Japan in the 90s and 2000s, China's yields have gone from 4% in 2018 to 1.6% at the moment. And what we can see here is that Japan is at 1.19. Now, the China to Japan spread is now the all-time low. Chinese rates are less than 50 basis points above Japanese 10-year rates. And let's go click on the Japan bond just to show you that in that before mentioned 2000s period, Japan was around, let's say Japan was like roughly 1 to 1.5, let's say 1.5. China was say 4 on average, right? It was 250 basis points. Now it's less than 50 on the spread. So we're seeing China becoming the new Japan. And look at what happened to Japan. This was the top of their bubble here. You can see Japan, rates went double digits, went all around the world. And even then during the big boom in Japan in the 80s, rates were 4 or 5% because, again, Japan had low debt levels in this booming economy and very low inflation. It's like a perfect, what do they call it? The Goldilocks economy. And then you can see Japan raised rates until September of 1990. The 10-year went to 7%. And then that deflationary spiral began. And really, since the late 90s in Japan, we've been below 2% on the 10-year bond. So is now China doing the same thing? And China has similar problems to Japan in that they're an export-oriented economy that basically is seeing has very poor demographics, seeing slower domestic spending, etc. And the thing about this with China, which is more serious to the global economy than Japan, is that China has been, consuming all the world's commodities over the last, 20 to 30 years, or a lot of the commodities, should I say, growth and demand for commodities. For example, since 2003, I think it is, China has accounted for 65% new demand in oil. So let's put it this way. If on a per day basis, there's a million barrels of oil increased demand, 650,000 of that million barrels was coming from China, right? Or say 10 million barrels overall during the course of a year. 6.5 of that 10 of that demand of that 10 million new demand was coming from China. So that's kind of stalling out now. And then of course China, because they do export so much, if they have a kind of glut in production or can't consume these things domestically, they might start cutting prices and kind of start dumping. And then of course also they might do that to kind of coincide with the tariff, so they can quote unquote start exporting deflation. So, and what's happened too, like Japan, China keeps doing all these stimuluses, and the stimuluses, those cities that in the middle of nowhere, empty cities, bridges to nowhere. Japan didn't do it on the city front, but they have all kinds of infrastructure where they were building bridges to nowhere and that sort of thing, just to create infrastructure jobs and to spend money to increase industrial production locally. China's done, and it's now not working as well. So this is the Chinese stock market, and what we'll see here is while the U.S. since the financial crisis has had this huge boom, we can see after this bubble move in 2000 into 2007, where the FXI went from just over 10 in 2004 to 50, and then it went down here, right, to 15. So you can see how this huge move, and then we can see we're still 40% below those 2007 highs. So if we go look again at the Nikkei, it's a similar thing that happened, since the 1990 highs. We'll get a 50-year or a 40-year chart in the Nikkei, so we can see that there's the blow off, and the Nikkei you can see is still flirting around those highs, but the low was really right here in 2008, 2009. So this was a 20-year bear market. Well, if we look at China from 2007 to the present this is 18 years. So maybe we have another couple of years left. Maybe this next deflationary bust leads us to the ultimate secular low in Chinese stocks. And even though no one considers Japan this big boom market because of their slow growth, well, the Nikkei has gone from about 7,000 to nearly 40,000 in the past 15 years. And really, you can see it started to take off in 2013 when it went from under 10,000 to 38,000. And actually, in I think 2013 or 2014, when it was around 14,000, I wrote an article in something called Financial Intelligence Report, which is a publication I write for, and I talked about buying Japanese stocks for the long run. And they've almost tripled since then. Now, granted, adjusted for the currency, they haven't done as quite as well, etc. But I just think it's interesting. Now we're seeing the similarities, the problems with demographics, what's going to happen with the domestic spending is slowdown, stimulus is not working. That yield on the bonds telling you you're in a deflationary spiral. We're seeing the similarities now in these two countries. Japan kind of just being maybe roughly 20 years ahead of China and on that front. So this is something to really watch because this could have interesting dynamics for the global economy going forward. So the question is, Japan's rates actually, you can see, have been creeping higher. Of course, they were negative back in 2019 and all the way through the COVID crisis. And we can see now they're at 1.2%. And actually, that 1.2% is actually back to where they were back in October of 19, actually even higher, but they went to 0.5% back then, but really back to where they were in 1998. So, and of course, if they go above 2%, well, Japan could have a debt crisis at that point because their debt is so large, they can't handle 2, 3, 4% on the 10-year bond, because their debt is 260% of GDP. And their short term, by the way, in Japan, rates are about 0.5%. And I think they're going to raise again to 3/4. And again, the short term rates in Japan and China are about 1%. So again, that is narrowing as well. You can see, Japan is 1.26 on the short term bond, and Japan is 0.5%. So that's 75 basis points. So everything's telling me that China is entering this kind of malaise and slower growth. We don't even hear about China being this big booming economy anymore, right? Actually, when people talk about emerging markets booming, they talk more about India and Indonesia and Vietnam and places like this now. They don't really talk about China anymore. So I thought I'd just leave it on that because I think it's very interesting fact and an interesting information that no one's kind of looking at it. This long-term kind of slowdown in growth and potential deflationary spiral that is happening in China. And of course, because they export a lot, they could start exporting deflation as well, at a time when we're all kind of worried about inflation. Now, maybe actually in a weird way, that's where the Trump tariffs help, because if China tries to export deflation, then all of a sudden you're still paying higher prices for those goods, right? So maybe that kind of counters that. But it's just interesting to me to see the problem that China's going to have is because of their demographics, because of these stimuluses all failing, that probably domestically their economy is going to continue to lag and continue to slow for years to come. But on the positive side, we're going to look at this. We look at this is one second. This is the Hang Seng here, and you can see, or sorry, actually, no, let's get the, where's Hong Kong? Just give me a second here. This is the Hong Kong Dow index. So we're going to go back 50 years, and what you can see is, this only goes back here, but if we were to see this, you can see that this is over 50% below its lows, and actually the Hang Seng actually reached 1997 levels. This is not even done well. The Hang Seng has done worse than this back then. So the thing is, if we do see, say, another year or two of a kind of a bear market in China and this deflationary bust, we could see stocks at 20, 30-year lows there, and it will bring a good buying opportunity. So that's the kind of the positive spin on it that you have to look, like I said, profit from pessimism. That's what I call it. But I think right now it's still a little too early. The Chinese stocks have had a nice little bounce. I'll show you the FXI, which is a Chinese ETF. And you can see it's had this bounce here, even hasn't done anything, from its low of 20, it is up 50%, was actually up as much as almost 80% last October. So I would still kind of wait on that, and especially if they do see some kind of a further deflationary decline. So anyhow, I hope you enjoyed this stock chart of the day, and we'll have a few more this week. Oh, the last note here on stock chart of the day, two things here. I'm having problems with my email server right now. So please try to go to the website because it's like the majority of my emails I'm promised. I'm going to import the email addresses either to my Substack or to another email server because the one I have I really don't like right now. I've been using it for years. I just think I pay too much money for it, to be honest, and it renews the 24th of every month, and I really don't feel like doing it for I have a good size list, but it's not gigantic, and I just don't think it's worth the money I pay. And then number two, yeah, I'm kind of running off my my tethering from my phone right now. I got Starlink because I love streaming sports especially, and my local internet here just wasn't fast enough. It's good for just doing basic work like this and jetting around the internet, watching YouTube, but live sporting events, it would just I get the circle of death all the time. So I've upgraded to Starlink. I just got into Nassau yesterday. I'm hoping to get it here on Wednesday or Thursday, Friday at the latest. But my internet, my regular Wi-Fi also um, expired yesterday, and I just paid it's not a plan. I just paid on a month-to-month basis, and I wasn't going to renew it for 4 days. So I'm just going to use tethering on my phone for 2, 3 days, and then when I get the Starlink, I'm going to be excited. I'll be able to watch the games this weekend and the Super Bowl at high speed internet. I'm going to be very happy about that. And yeah, and then I think it'll really improve the quality of these videos, et cetera, as well, because I have a much faster internet. So everybody take care, and we'll talk to you later.